In late June, footage from crypto mining farms in China started popping up on Douyin, the Chinese version of TikTok. Machines that mine cryptocurrencies like Bitcoin were being dismantled and packed up. These facilities in China have produced up to 3/4 of the world's supply of Bitcoin. But that started to change when about a month earlier, one of China's most senior officials said the central government pledged to crack down on Bitcoin mining. But he didn't specify what measures it would take against crypto miners. However, some local authorities began taking action.
虚拟货币的矿机被集体断电。
A government-backed news outlet showed social media footage of miners turning off machines after authorities in Sichuan province ordered electricity providers to stop supplying power to these facilities. After Beijing's warning, the global mining hash rate, that's the measurement of the computing power used to mine bitcoins, dropped by almost 50%. So miners around the world are taking advantage of the exodus of Chinese miners to expand their own businesses and hoping that the power behind cryptocurrencies is becoming less dependent on a single country. So crypto mining farms are usually made up of thousands of specialized computers, and the miners who get the right answers first are rewarded with new cryptocurrencies, and these new coins can be then sold onto exchanges. The vast majority of these specialized machines have been manufactured in China, giving miners their quicker and cheaper access than others around the world. So with easy access to both machines and power, a large share of global Bitcoin mining has happened in China. But Beijing's tightening grip on the industry is forcing its homegrown miners to look for a way out. Since 2017, crypto trading has been outlawed in China because of the potential risks cryptocurrencies pose to financial stability and the possibility of the assets being used for illegal activities. And now, mining has come into sharper focus because of the massive amount of electricity consumed by farms, posing a threat to Beijing's commitment to limit its carbon footprint. So miners in China are selling their machines overseas or moving their operations to countries like the US, Russia, and Kazakhstan. This exodus from China has benefited miners elsewhere. Ben Gagnon is a chief mining officer at Bitfarms, a publicly traded Bitcoin mining company in Canada. And he says business after Beijing's announcement has been booming. This has also meant access to some of the best machines that were once hard to get. Prices of these mining machines have also dropped substantially. For instance, one of the most popular models, which used to cost more than $10,000, was available for around half the price. With the market awash in cheap machines, Gagnon says crypto miners are looking to expand across North America and Central Asia. But expansion comes with one big item that isn't so easy to come by. Gagnon says it's a race against time to set up the power infrastructure before other miners come back online. But the crypto industry overseas could face similar pressures as in China. For instance, in the US, authorities have proposed plans to hold crypto exchanges to the same standards as traditional securities and financial services, while some local communities have expressed concerns about the environmental impact of mining facilities. Despite the challenges ahead, once these new mining farms are created, crypto mining will likely no longer be concentrated in just one place.
Concentration in China is the most dangerous outcome because, as you can see, the entire mining industry in that state can shut down.
As for China's homegrown miners, the once golden place for mining will become a less viable option.
These miners in China are now looking for new homes in favor of places that are secure. They know the costs are far too high. They need stability.